Hello, good day to you. My name is Ed from Robeco. I would like to use 4 or 5 minutes of your time to explain how we have looked at investment views by HSBC and how we link to that. Where do we agree, where would we might be not agree? Well, already very happy to say that we agree with most of the things in the CAO view for sure. And let me explain that, what I mean by that. So two important things that we noticed in the views was at the top. A focus on large cap holdings with good earnings potential. And second, a broad opportunity sets in terms of sectors. Well, we agree certainly on both of these things as being very important for 2024. You'll also see, for instance, on the sector approach, that although we come from a consumer perspective, consumer spending is actually in many more sectors. So you see also exposure in IT, in consumer health, in communication services, even in financials with payment companies, for instance. So totally agree. Even when you favor, like HSBC does, also consumer staples, consumer discretionary, actually your approach should be much more broad than that. And that's what we totally implement in our portfolios as well. Second, a focus on large caps. That is almost automatic a reaction by us that we agree on that too, because we have always invested in the structural winners. Those are companies with clear, sustainable competitive advantages. Most of the times you and your clients know these companies well because they are the number 1 and 2 in their fields, dominant companies, if you will. And almost by definition, those are large cap companies. So we totally agree on that part. And then probably the most important word in the view that we saw is earnings growth. Why is that important? Because I think most macroeconomic analysts would point to a subdued or slow economic growth. People still speak about soft landing, hard landing, even recession is still mentioned, which means a slow economic growth. Well, if you then want to find earnings growth, we think you should capitalize on structural trends that are more or less independently growing, independent of the macroeconomic situation, because that is just only slow growth. So for that, as you know, we have always identified long-term trends, long-term themes. That is the ongoing digitization, that is emerging middle class. We noticed in your view that there was also a reference to countries like Brazil, where we have Mercado Libre or Nubank, or Mexico. So totally on the same page there. And then thirdly, health and well-being, a little bit more defensive part in how we would invest across broadly those sectors. You also see some examples of stock picks that we would invest in at the moment. Again, well-known dominant players. We do think that these dominant companies have scale effects, better brand names, and therefore better able to have earnings growth. What does it mean for 2024? These are topics within the long-term trends that I just showed, those 3 topics that we like going into 2024. Digital payments, the move to digital payments, still quite a big thing. E-commerce, actually e-commerce recently put in some good numbers, so also looking good. Entertainment, still important, although we are quite critical on what stocks to buy there. The platforms, those are the big tech companies and successful in 2023 thanks to AI. Well, we think AI has longer legs also next year. That can be an important topic. At the bottom, you see more the defensive parts of how we would invest across those broad sectors. That is healthy lifestyle. That can be things like diabetes. That can be healthy lifestyle, exercising, natural foods. But it's also personal care, skincare products, cosmetics, for instance. And it's also the importance of your cat and dog. Quite a resilient topic in a slow economic environment. Well, for the emerging consumer, luxury is still important, although some good years have already been in 21, 2022, and again, large caps with emerging champions. This is just explanation or examples of some stocks that we could select, given your views, and those are actually in our portfolio. Going forward, and this is what we believe for 2024, but I think we're pretty much on the same page here with your organization, HSBC. First of all, structural growth trends still intact. Important because we are living in a slow economic environment. So you need a better driver than only the macroeconomic situation. Second, valuations have derated already. That was in the first half of 2022, mostly. At the moment, We would not say valuations are per se cheap, given the higher interest rate levels, but they are reasonable. Well, speaking about interest rate levels, central banks are expected to have seen peak interest rates, so not many people expect more increases by the central banks. That would be a very good thing, because for a quality growth manager like we are, fast rising interest rates are probably your biggest risk, but that's a risk that has already been discounted or derated in 2022. Well, we're always on the lookout for new topics, such as AI was a big topic this year. What will be then the topics for next year? And we think consumer health, for instance, is pretty big going into next year. With that, if you have more questions or need information, please find us. Thank you for your time.